Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Well, Jim, we're going to talk about this bizarre plan to slap a 50% tariff on copper imports for the United States. We're also going to talk about some new developments with the favorite collection.
Why do you think a 50% copper import tariff is a wacko idea?
You know, Robert Friedland came out and actually said, well, it's a good idea to apply a 50% tariff on copper imports. And the reason, of course, his Ivanhoe Mines produces copper in Congo, and it's all sold and delivered to either the Shanghai or the LME warehouses, where the spot price and the futures price there determine what whoever ends up with the copper pays for it. When you import this copper into the United States, it's not going to be the producer who pays the tariff. It's going to be the end user who needs it. The purpose for this, it's a laudable purpose. The United States, its production of copper actually peaked in 1998, and it's now, and last year it was only 57% of what it was in 1998. And that's just before the China super cycle kicks in, and China goes from being a so-so economy to being second place behind the United States with $17 trillion GDP projected for this year, and the United States at about $30 trillion. So China has been busy catching up. And one of the things it did was it sacrificed its environment to concentrate not just production from its natural endowment of a lot of metals, but also the refining, smelting, and processing of concentrates from around the world. And it was able to do that at a lower cost than anywhere else, especially the global West nations, because it really didn't care about the downstream victims on which the emissions were dumped. But it has, as a result, secured a strategic advantage. And during the past 3 decades, while the United States celebrated its exceptionalism, there emerged an arrogant, NIMBY attitude where we don't want to have mines in America. That can be done in shitholes elsewhere in the world. The downstream victims, we don't see them. They're invisible, so we don't care. We'll have all our goodies imported from elsewhere, and we'll have no mines. And so what crept into all the permitting agencies at the BLM and the U.S. Forest Service was kind of an attitude of deny and delay, similar to what the health insurance companies do with their customers. And this has resulted in a slowdown of exploration and mine development in the United States. Now, this is a problem because the path that Trump has chosen for America, namely America alone, which involves using its hegemon status to bully everybody into submission and try and force manufacturing back to the United States, it's really just going to result in a lot of hardship in many countries, but they're all going to adapt. And China's going to step in the breach, and it has to deal with its own problem because it has failed to develop a middle class that's consuming its production. It has developed overcapacity for an export economy. It has, in a sense, created this mess that everything is because of Xi Jinping's obsession for long-term prosperity for China without really thinking about what its people are, how they are going to benefit. So China's in this deflationary spiral where these people all are caged in by hyper-surveillance, not allowed to criticize anything. They see the real estate boom has crashed, and they're afraid. So they're not spending money, and there's absolutely nothing he can do to jumpstart consumption within China. So we have this mess where China's trying to unload its excess capacity on other nations as the United States sets up tariff blockades to keep it from coming in. Now, the metal production vulnerability of the United States, when you look at my graph that shows how much of each metal comes from the United States, China, and Russia, it has created a very serious problem. Now, in the long run, manufacturing will reshore to the United States, but it cannot happen overnight. It takes 2 to 3 years, and this taco uncertainty he has created, everybody's paralyzed. Nobody knows what 2-3 years the tariffs will be. Will it be back to normal? Will there be an administration change and globalization is back on track? So it really isn't happening, and it's going to create a lot of stress within the population as everybody adapts to higher prices for imported goods. Now, the problem with mines is even if you have one already got a PEA done on it, it'll take 5 to 10 years to get it into production. And if you're starting from scratch exploring, it may take even longer. And part of the problem has been the permitting agencies. They seem to have had the green light to slow things down, keep things from happening. And the important thing that Trump's copper import tariff will do is actually put a spotlight on this vulnerability that America has developed. Because if the United States has basically withdrawn itself from the Global West alliance of democracies, it may even be on a path to autocracy. I mean, the ICE army has a budget bigger than Canada's military budget, and we can see where this is all going. But if you have this isolated nation that's not really trading with the rest of the world, which will learn how to simply trade around the United States and with each other, in the process of which, if China can avoid its own implosion, will end up becoming the biggest economy. The United States will still have to do something about where all its raw materials come from. So hopefully, putting the spotlight on copper, of which, the United States imported 1.6 million tons last year versus the 1.1 million tons that it produced. By the way, 48% of that copper came from Canada, just to the north. What has to happen is that these agencies need to become more accommodating, not necessarily ditch the rules, but get rid of this deny and delay strategy that they have ended up doing because they've been under the scrutiny of these lawyer-backed NGOs and anti-mining lobby, this whole NIMBY crowd. That hopefully is being pushed aside, and we can see proper permitting for both exploration and mine development be done in an efficient manner going forward. But this copper pricing or copper tariff, it has created a strange anomaly. The COMEX copper price, which is a continuous copper contract, meaning it's a futures derivative that rolls over every month, producers and end users use it to hedge their the price they get for selling copper and what they pay for their inputs. But speculators use it to trade. It has, in the past week and a half, surged to about $5.60 a pound, whereas the LME at the same time actually started going down. So the LME price, which is really the global price for copper, is $4.42 as of Thursday per pound. And this is something I really don't understand why they would do this copper tariff. It basically makes it expensive for anybody in the United States who needs copper. And I'm not sure that this would apply to copper that's already fabricated into some finished good that is imported to the United States. It would go to building infrastructure such as power infrastructure for the AI community and for electric vehicles that use an awful lot of copper. This really seems to be a self-harming type strategy. So hopefully this also turns into a taco event in the not too distant future, but hopefully also the shift in attitude about permitting, exploration, and development is going in the right direction.
Are there any signs that U.S. permitting agencies are adapting to the new urgency to find and develop domestic metal supply?
Well, one of the KRO favorites is Faraday Copper Corp, which started the year off at 74 cents, and it's been kind of range-bound in the 70 cents to 90 cents range. It hit a high of $1.23 this week before retreating, and this rise seems to coincide with the rise in the COMEX copper price, but it really doesn't have anything to do with that because they are still at the PEA stage. In 2023 May, they produced a PEA where they used a $3.80 per pound base case copper price, and it didn't really clear development hurdles, but they provided a sensitivity table in their technical report which showed that at $4.25 or higher per pound, the Copper Creek project in Arizona, which is part open pit, part underground, does indeed clear the development hurdles. Now, they are in the midst of working on an updated resource estimate and an updated PEA, which they expect sometime in the third quarter, sometime between now and the end of September. But the very significant thing that happened was an announcement on July 2nd. On June 30th, the BLM had finally published the final environmental assessment for an exploration plan of operations the company had filed some time ago. It involved 67 drill pads on the Copper Creek project, but they had a FONSI attached to it, meaning a finding of no significant impact, and the decision record was basically issued on June 30th. And this milestone was announced on July 2nd, and that's really when the stock started to go up, because projects like Copper Creek, they're complex, they have multiple zones, but they also have a lot of additional exploration potential. Now, most of these drill pads are going to go for infill drilling on the Mammoth and the American Eagle zone. They're going to have greater drill density to upgrade it to pre-feasibility status, study status. But they also have drill pads, for example, 9 drill pads are assigned to entirely new targets where they will do scout drilling. So here we now have they have the go-ahead to properly delineate for feasibility purposes the pounds that are already in the ground, but they also have the green light now to explore for new targets. And sometimes with these types of districts, what turns out to have been the initial focus of all the feasibility demonstration activity turns out to be a sideshow. So at the same time, we have this project moving forward as a feasibility demonstration play, which normally means that you sit in the value trough below fair value. But we also now have the potential that when the new scout drilling on these new targets delivers a discovery hole, there could be an entirely new dimension for Faraday Copper. And there's other signs of positive things happen. I mentioned a couple of weeks ago about Solitario Resources Corp on June 20th. Finally, the U.S. Forest Service kicked off the 30-day comment period, and they published on their website that they expect a decision by September, which would be good for Solitario, because then they could mobilize a drill program for the Ponderosa plan of operations that's now being considered. And it'll be an interesting sign at the end of this month when that 30-day window ends. Will the U.S. Forest Service add another extension to it like it historically has done thanks to pressure from the NIMBY lobby? We'll see. Hopefully they just say, yep, that's it, 30 days, that's it, your comments are in, we are going to review them, and we'll make a decision in September. And another interesting development, I was talking to Mike Stark the other day of Arizona Gold and Silver. He had just put out a press release for drilling at the Philadelphia project, and of course the market doesn't really care at this point because this is an incremental development of this vein. But he mentions that they had submitted to the BLM a modified sort of plan of operations for 200 acres of disturbance. Now, and they have been told you'll have a decision by December. Now, this is really interesting because they spent an eternity getting just 2 drill pads representing each 5 acres of disturbance on the BLM ground so that they could step back and drill deeper holes into the east plunging Philadelphia vein system. And that had really hamstrung them. And of course, they also wanted to be able to drill the Red Hill target, the hypothesis that there is a bulk tonnage gold system sitting on top of the in the hanging wall of the vein system. And so they finally got that in July of last year, and because of a very hot weather, they weren't able to get drilling until September. This year, they've got their act together. They set up tenting systems over the drill rigs with mister systems to keep the temperature down so low. So they're going to be drilling all summer, no matter how hot Arizona gets, because they've adapted to this climate change that's clearly happening. But when they drilled from the first platform, the Red Hill target, didn't get the grades that they were looking for. And now they're drilling from the other platform, and for the moment they're focused on the Philadelphia vein, but they will turn around and test eventually the Red Hill target. But if they get this 200-acre disturbance approved, then they can site their drill pads around the entire so-called Red Hill area and drill it from any angle and figure out what is there. And if there is something there, they'll be able to delineate that target and deliver a bulk tonnage resource estimate. So these are signs that the attitude is changing within these permitting agencies. Let's hope this trend continues.
Any other developments for the favorites collection?
Well, on Monday, I published an update on Quartz Mountain Resources with the title "No Schwartz for the Quartz." And that was an allusion to that Spaceballs parody Mel Brooks did of the whole Star Wars series. And Nick Hodge, who had written, a newsletter writer who had written up Quartz Mountain and the Maestro project earlier this year, had finished it off with the quip, "May the Schwartz be with quartz." Unfortunately, when the results from this phase 2 drilling program, which consisted of three new holes and a wedge off the one last year that got them all excited, it was evident that the Schwartz was a no-show. Nevertheless, Bob Dickinson was all smiles. The market was not smiling, and it actually went down. So I took a close look at what this was all about, and clearly what the market did not like was the gold grades that were all below 0.5 grams per ton. And the analog supposed to be the Blackwater deposit of Artemis Gold, which is now in production and sporting a $6 billion or so valuation. And I've done the discounted cash flow model numbers on that, and that is fair value for that project. Now, the footprint at Quartz Mountain's Maestro project is somewhat similar at the moment, smaller, a couple 100 million tons instead of 300 million tons, but it's a similar style of system. And when I looked closer at the press release and that, I realized, okay, they had planned to drill 4 sets of 2 holes in a sort of westerly direction along a 500-meter segment of the 1 kilometer long, what they call the Prodigy Trend. And this was based on a resistivity anomaly. And when they drilled those 2 scissor holes last year or in late 2023 and reported the results in early 2024, one of the holes was a dud, but the other one had very good numbers. And they thought they had figured out the controls of the higher grade mineralization within this big altered system. And it turns out they did not have that figured out because none of those holes intersected any high-grade mineralization. So why was Bob Dickinson smiling? Well, because he had seen the core. They know now they have a very juicy system. And they have resumed drilling. It'll probably be 12 holes or so. They're well-funded for that. They'll even have money left over from it. And they have ditched the idea of this Prodigy Trend with a northeast-southwest orientation. They are now focused on what they call the Prodigy Eye, and this is more sort of a west-east magnetic low. And what the drilling has shown, Bob, is that, yes, this is magnetite destruction. This is has been intensely pulsed by hydrothermal activity. And yeah, we didn't get the high grade. We don't understand whether it's skinny breccia pipes or what direction they really are going. But this round of drilling, it's going to step in there and cross-cut this big zone, this 200 million ton footprint from the west, from the north, and the south. And we should start getting results in August. The market has stopped being grumpy and has recovered somewhat, but it is now in a show me mode and hoping that the Schwartz does end up coming to the quartz and support it with some intersections that show, yes, the high grade is in this system. It's going to take a lot of drilling, as was done with the Artemis Gold Blackwater project, and that hopefully will kick off the S-curve activity in September if they show that this is not just a system that's uniformly below half gram per ton gold, but it does have high grade in it, and you'll get something like the 1 gram per ton plus grade that Blackwater, that Artemis Gold is able to mine in the early years of the Blackwater mine. And then the other thing that I did this week was on July 8th, I turned Snowline Gold Corp into a favorites collection at $8.01. Now, Snowline Gold had published a PEA on June 23rd, and this PEA was very robust. They haven't published a technical report yet, but they published enough information that I was able to kind of approximate an ore schedule, create a tentative discounted cash flow model, and see what happens to this project at different gold prices. They had done the base case at $2,200, and it clears the development thresholds at that price. That's how robust this the Valley deposit in the Yukon is. And they also gave us what the NPV would be at $3,100 gold, and that turns out to be 6.8 billion Canadian dollars. And that would, at using NPV at that 5% discount rate. So that's a future price of $40. Does it deserve to be at $40 at this point? No. The project has moved to the pre-feasibility stage, where the certainty for the fair value is 25% to 50% for the projected outcome. So that means fair value for Snowline should be in the $10 to $20 per share. Now, the stock had sagged this week to about $8 because the market seems to perceive that, okay, this is now in the feasibility demonstration trough, that part where where the value of a project actually goes below fair value. You can also see that in the Lassonde curve and in my S-curve, and this stock is going to be a dog. But there were two special circumstances with regard to Snowline Gold, which prompted me, this needs to be in the bottom fish collection. First of all, back on March 25th in a Kaiser Watch episode, I talked about Lundin Gold as a potential ideal fit with Snowline Gold. They have their Fruta del Norte project in Ecuador that's spinning huge cash flow. The stock has done really well. They need to diversify their portfolio. The Lundin family is familiar with the area of Yukon. So this is a company potentially that could make a bid for the company. And if you make a bid for the company, it would have to be in the $15 to $20 range. Now, what's changing with this market is the longer gold stays at these $3,000 plus levels, the less people worry about, it's going to crash back below 2,000 or to that 2,400 long-term consensus level that all the experts in the financial sector are predicting for gold. And when that happens, the market's going to resume treating the mid-tier producers as a leverage proxy for the price of gold. Right now, they're listening to this consensus view and then just enjoying this gold price bubble, enjoying the cash flow, and not making any particularly aggressive moves. But when the market begins to think that, no, gold has undergone a fundamental reset, and the one big ugly bill is sure going to help encourage the market to do this, then they'll start buying the mid-tiers. And when the mid-tiers break out from beyond where they're already at, that's when they will become eager to use their paper as currency to acquire Snowline Gold type companies. But the second special circumstance is that Snowline Gold has a huge land position in this part of Yukon, which is now recognized as having hitherto potential that was never really recognized, of having these very robust, 7 million ounce reduced intrusion-related gold system deposits. Usually we've just seen that sort of stuff in Alaska, part of the Tombstone Gold Belt. Now we see that this is also happening here. And they are going to be, as they're plotting through the feasibility demonstration work, they're also going to be exploring other targets in their vast holdings. One of them is the Celestic target on what they call the Cynthia project. So we could get news anytime that, here's 100 meters of 1.5, 2 grams, another major new discovery. And if that would happen, I mean, a mid-tier is not going to be able to make a hostile bid for the company. They've probably already signed a CA, which prevents them from doing so. So they would end up having to do a plan of arrangement. Because the Berdahl family owns 17% of the stock, they can sit down and say, yeah, we want to keep the rest of these properties. We'll sell you the Valley project that you can develop, and we will carry on. So there isn't just the potential for this stock going into the $15 to $20 range by the end of this year to reflect a potential plan of arrangement where the Valley project is acquired by a mid-tier producer or maybe even a bigger producer. But there's also the potential to repeat the discovery, in which case, because there is this spin-out potential, there is this compounding value that normally you do not see with a junior that makes a big discovery, pretty much has its limits figured out, and has to just sit there and wait out the feasibility demonstration work and hopefully a bid at a premium down the road by a major. And interesting thing happened today, 11:32 Pacific time. All of a sudden, Snowline Gold seemed to wake up. And then in 3 minutes later, the circuit breaker kicked in, and it was halted. It was up 78 cents at 8.81. And when they allowed it to resume 5 minutes later, it gapped up to 9.50 and traded as high as $10.52. And it eventually closed at 8.96, up 93 cents on 1.9 million share volume. At first, I thought some producer that isn't bound by a CA had entered the market to try and get that 10% before making a hostile bid. But then it turns out that exactly at that time, there was a Fox News feature on small caps which focused on Snowline Gold. And what I really found interesting about that was that this mass audience responded immediately to this focus. And I've done the crunch the numbers. The stock should be $15 to $20 right now, waiting for duplication through a new discovery or an actual bid from one of the mid tiers. But to see market actually react to mass media exposure, especially in the gold sector, in our unloved resource junior sector, I think this may be a watershed moment in the emergence of a secular gold bull market for the resource juniors. I know I've said this, I've been waiting for this for quite some time, but I think today will have been an important day, and it's excellent that a company such as Snowline Gold with such a robust deposit and PEA is the focus of this development. And it's also causing lots of interest for the rest of the Yukon area and even parts of Northwest Territories. Rakla Resources, part of my bottom fish collection, was up at 60 cents or so on heavy volume as it starts drilling the grad target. Sitka Gold is attracting ever more attention, and of course the other bottom favorites that I promoted from the bottom fish collection, Trifecta Gold. It's also by now drilling a high stakes covered target in a valley, and if that turns out to be a reduced intrusion related gold system, then we have another great story right in the backyard of the Keno Hill district, not the remoteness of some of these others. So this is going to be a big, fun summer up in the Yukon.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.